Welcome back to the Brent Bruce Daily. What a wild ride we had yesterday. That was a rough day. You recall that we were watching the charts, and really, I told you I was going to try to find out what happened and what caused all that. The only thing that I actually heard may have caused the disruption in the bond market is actually Nancy Pelosi visiting Taiwan. I mean, that's the only thing that came out. But realistically, I would have expected the opposite. If we have geopolitical issues that we think are going to negatively affect our economy, normally the bond market will improve because people take money out of the stock market, move it into the bond market because the bond market is seen as more of a safe bet, and mortgage-backed securities are bonds. So I don't really like that description as to why we had the rough day we had yesterday, but we definitely bounced off the ceiling of resistance that we had talked about. Let me pull up our chart here. Where are we at? Okay, so we definitely bounced off of our ceiling of resistance that we talked about the day before, that we were going to hit this number. Now, I was hoping we were going to break through this number. We didn't. We bounced off of it. Who knows? People didn't like that Nancy Pelosi visited Taiwan. I don't know. But we bounced, and we bounced hard and fell under the 100-day moving average, under this Fibonacci level, and we were left in this range. And I had said yesterday, as tough as that day was, that at least we felt confident that we were not going to go much further because we had a triple layer of support that we were just about standing on right here, which is a 25-day, the 50-day moving average, and also a Fibonacci level that was at 100.603. So if you're watching this show regularly, this is starting to make sense, right? You kind of go, oh, I see this is a floor, this is a floor, this is a floor. That's a triple floor. It's going to take a lot to break through that. And if it did, it would have been way down here. We would have had a rough time because there was something going on in the economy that really beat up the bond market. But that's not what we saw. What we saw is we opened this morning, we fell. We fell, like I was saying earlier, 20 to 30 basis points. But what do you know? Boom. Bounced right off of our triple layer of support. And now I've had a good run today. Actually broke above this Fibonacci level. We're above it right now. We're at 101.28. This Fibonacci level is 101.219. So we're above it a little bit, but you can see it's kind of acting as a ceiling, right? We didn't just run on up to our 100-day moving average, and we're sitting in this range. So what did that do to the home loan interest rates? Now, again, when we were looking at our Brent Bruce Daily scenario yesterday, I believe we were talking about getting into the fives, 4.99 or 5.125 because of this crazy drop here. So let's take a look and see where we are, run this Brent Bruce Daily scenario. Like I say, yesterday, there was a time when I actually was at 5.25 on our Brent Bruce Daily scenario. So let's take a look and see if we are still at 5.625 or if we've had some improvement with bouncing off of that floor, the triple floor of support. Where are we? 4.99. Okay, so we did have some improvement. Now, again, we didn't regain all the losses of yesterday. We see that in the charts, right? But we also see that we are now at 4.999, a pretty good credit, 1,872 credit. If we open this up, that tells me we're probably pretty close to a 4.875. Oh, there it is. For $137, 4.875. So if somebody wants to pay $137 in points, this is points, guys. When someone says pay points, it means buying a lower interest rate, okay? So for $137, 4.875. If they want to pay almost a full point, that's 90% of a full point, they're at 4.625. All right. So obviously, as I always mention, again, this is not just a sales pitch, but these numbers are way lower than you're probably seeing if you're working with mortgage bankers or Quicken or any of these other Rocket. They're probably 1/4 to 0.5% higher in interest rates. But you get the feeling here, you get the understanding of how home loan interest rates move and usually why. Again, my reason for why is not as strong today as I like for it to be because I don't know why it was such a bad day yesterday, other than bouncing off of the ceiling of resistance and the fact that there was some geopolitical issues or concerns with China and the United States and Taiwan and Nancy Pelosi. Didn't make sense to me. But I also want to do one more thing. So that's it for our home loan interest rate today. But I also want to point out one other thing. Are we in a recession? Right? So people are asking that question all the time. Are we in a recession? Are we going to go into a recession? I believe that we are in a recession. So the first quarter, we had a negative gross domestic product report. So the GDP report is what we're looking at normally when we determine if we are in a recession or not. 2 quarters of negative GDP in the United States is what people say is we are then in a recession. But that is not always the case. Okay. So the people who determine whether we are in a recession or not is the National Bureau of Economic Research. There's actually a group of people that look at more factors than just gross domestic product to determine if we are in a recession. And they are the ones who actually declare if we are in a recession or not. And we are not declared to have been in a recession if they do not make this declaration. So the second quarter for this year, we had a negative number. That would be 2 quarters in a row. But each time gross domestic is reported, there are 2 other revisions. So we don't have the final figure yet. And if I remember correctly, we were negative 0.8, which isn't that far away from being positive, only negative 0.8. So there may be some reasons. I mean, I think there's probably some political stuff going on as well, but there may be some reasons why for the first time in the history of the United States, as long as it has been reported, that we may not be declared to be in a recession, even though we have possibly 2 quarters of negative gross domestic product. I think there's probably some people that are trying to pull some strings and not have the word recession come out, especially at this time of our political environment. But you see what is going on with our home loan interest rates here. What do we think is going to happen going into the future? Let's take another look here. We are moving above, even more convincingly above this Fibonacci level here. We're probably going to hit up against this 100-day moving average and maybe hang out, because tomorrow we're going to have a jobs report. And then on Friday, we're going to have an employment report. So those are a little bit different. And both of those are big market movers. So we're going to have to see what those reports come out looking like. And then we'll be able to determine which way we're going to go from there. So I will keep you posted. Let me know if you have any questions at all. Make sure that you subscribe and like and share on YouTube as we move further over to that channel away from Bomb Bomb. Let me know if you have any questions. Have a great day.